I'm Charlotte McLeod with the Investing News Network, and here today with me is Andy Schectman, president of Miles Franklin. Thank you so much for joining me today. Great to see you.
Good to see you too again, Charlotte. Thanks for having me.
Yeah, of course. And so we're here today at VRIC in Vancouver. I want to start by asking you about sentiment on the show floor, because you were mentioning to me how big the audiences have been downstairs when you've been speaking today. So what are you seeing out there?
The sentiment is great. It really is. You know, it's always these kinds of shows. You know, you're speaking to the crowd, or to the choir rather. Excuse me. And but the choir seems to be expanding, and the questions that they're asking and the reasons that they're listening seems to be growing and more diverse. So, yeah, it's a choir that is younger, and a choir that is more in tune to what's happening, I think, from a political and economic standpoint, rather than trying to come here to get wealthy. I think they see not only opportunities, but they also see how owning precious metals and mining shares and whatnot is very important in a period of time where things are rebalancing, where realities are changing. And so it's a more diverse, broadening choir. And but you know, that's what happens when you come to a resource convention. But nonetheless, it gives me great optimism that more people are waking up and looking at precious metals and precious metal resource stocks as a place to put their money.
Yeah, well, and one thing that you just said is really standing out to me, and that's the idea of, you know, people are maybe not looking at it as a get-rich-quick kind of thing. So that sounds to me like people are understanding the role of gold in their portfolios, and silver as well. So maybe you could talk a little bit about that. Is that what you're saying?
Yeah, I mean, to me, gold and silver are wealth. And if you own enough of it, you'll be wealthy, albeit it's not the reason to buy it. And I think that that's something I've been very consistent in for a very long time, speaking to it as wealth. I think if you're coming to buy precious metals or even mining shares with the anticipation of getting rich, it becomes a little bit more of a difficult ride. It's a volatile market. It's one that has been detached from I don't want to say reality, but there have been a lot of things that are counterintuitive in this industry, where we think things should be doing better than they are. When we factor it against a very strong dollar, things aren't really the way we think they are. There's been a lot of people since Silver Squeeze, as an example, that came into the market buying silver to get rich, and I think they've been sadly disappointed. Yet I am very optimistic on silver, looking at its performance, because I saw it hold up very, very well in the face of the strongest dollar we've seen in decades. In fact, the last time the dollar was this strong, the US dollar, silver was $5 an ounce. So to see it at 24, I have great optimism that we're where we need to be, and as the dollar corrects, it will start to perform better. Other people who bought it to get wealthy look at this and they say, well, geez, you know, there's war, there's inflation, there's craziness politically and geopolitically, why isn't it doing better? And so I think it's how you look at it. And if you look at it and realize that it's been wealth since the beginning of time, through 2 world wars, through German hyperinflation, through the Great Depression, through every pandemic, and is still immutable wealth, it's easier to deal with the ups and the downs because you are owning it as a form of wealth. You are not buying it to get wealthy. And there is a difference in not only in definition, but I think in the way people look at it in their portfolio. To me, I hope I never need to touch my metal. If I do, I'm darn glad I have it. And it's not just for an emergency. Maybe when the dust settles, there'll be a hell of an opportunity. But if not, I know that when I give it to my children, and God willing, their children get it, long after the dollars in my wallet are hanging from a frame in the Smithsonian as an example of what used to be gold and silver, will still be immutable wealth, the way they have been for 5,000 years. And I think if you look at it that way, more historical context, I think it's easier to deal with the fluctuations, the volatility, and even the counterintuitive nature of this market over the last few years.
Right. So we know that people are showing up here at this conference. They're interested. But what I also wanted to ask you about was actual physical gold and silver buying, because I think you get kind of a front row seat to that, I'm sure, at Miles Franklin. So can you tell me about the extent to which people are buying right now, and who's doing it? Any themes that you see?
Well, I think first, if you're talking about demand and supply, it would be a mistake to not start at the very top. The one thing that's kept me most optimistic that we're on the right path is less the price, and again, looking at it from the way that the people are who are looking at it as an investment, a little disappointing. You think it would be doing better. But what I would say is that if price were a true reflection of demand, then there's another story here. And that story is, for example, the London Metals Exchange, a 140-year-old exchange, has the lowest amount of silver inventories ever in the history of the exchange. And they recently came out a week or two ago saying that if silver deliveries off the exchange happen in 23 the way they did in 22, that there won't be enough silver left. The COMEX market, the US epicenter of silver and gold and all commodities, has only 33 million ounces in the registered category. That is the category by which all of the contracts that are issued are based off of. If people stand for delivery, they come out of the registered category. 33 million ounces sounds like a lot, but when you realize that the country of India in 2022 imported 304 million ounces, 10 times what is in the registered category, you realize we're on the razor's edge. The biggest money in the world has been withdrawing metal from the top on down, not only off the LBMA or the COMEX, but also draining it out of the silver ETFs. Very quietly, it's called share redemption, where very, very wealthy people who have large amounts called baskets of SLV as an example, or GLD, can actually redeem the shares for metal. But most of us can't do that. You have to be one of the very, very top. But what I guess I'm seeing is front running, first from the very top on down. And when you realize that in order to pull metal off of these exchanges, you need to be very sophisticated and very wealthy. And once it leaves the exchanges, which is a unique characteristic to what we've seen in the last few years, where it leaves the ecosystem, it loses all industrial liquidity, meaning it's a one-way ticket. It's probably part of the 300 million ounces that were sent to India, or part of the 400 metric tons of gold that were shipped out of the West to the Eastern Central Banks in the third quarter. Because when you lose that liquidity off of the exchanges, meaning if Elon Musk says, I'll pay a $20 premium for every ounce that people want to sell of their 1,000-ounce bars in COMEX, if it has left the COMEX chain of custody, to get it back into the chain of custody would require assaying and time and expense that would make it unrealistic. So I guess what I'm saying is that all of these deliveries off the exchanges is creating, to me, a story that the biggest money in the world is taking possession of metal, and they don't care about price because they see what is coming. Now, if we translate into what it has meant in the retail industry over the last 3 years, it's really been the central theme of most of what I've talked about on the industry side, is that it was becoming impossible to get. And it was where normally we would have inventory in stock at all times. We had to pay for it 12, 16 weeks in advance, hedge it, and run logistics from all around the world to get it in. And by the time it came in, it was already front sold. So getting product when you realize that only 0.5% of the entire US financial matrix is invested in metals, and getting it has been the biggest challenge of anyone in my position of what we do. It certainly doesn't, it's not reflective of the price. The demand has been off the charts from the top on down, and the price, while it's hung in there in dollar terms, is not reflective of the demand, I think, from the very, very top, even all the way down to the retail consumer that I deal with.
Yeah, this was kind of on my list of things that I wanted to ask you about, because we have this Silver Institute projection for 2022 silver. Yeah, and that was very interesting to me because this was an all-time high, I believe, and yet in terms of the price, we didn't get as high as we got in 2020 when we had the whole silver squeeze going on. So this probably goes back to those counterintuitive things that you're talking about in the markets here.
Yeah, you cross a line when you talk manipulation. And for a long time, I was talking manipulation at these shows. And people, I wondered what they thought. I remember one day John Embry came up to me after he said, you should listen to that gentleman. He said that on the stage after I spoke, and he said, I wish I could say these things, but I work for a publicly traded company. And I've always known that talking about manipulation in this industry was viewed kind of, it was gray, right? Well, when you see JP Morgan pay a a $920 million fine and admitting guilt for suppressing the metals market. You have to understand that these markets are being suppressed by a handful of bullion banks. And for whatever the reason is, you can see it in the charts, you can see it in the admission of the guilty traders of JP Morgan, and there are a million other ways to definitively say and non-objectively that the price has been controlled. And I do really, truly believe that the price has been controlled. But here again, I really do believe, Charlotte, I really, truly do believe that it is being controlled specifically for the biggest money around, at least right now, to reposition. And you can see that. You can see that the biggest money is draining the exchanges, is accumulating metal. They're front-running what is coming next. And so as far as the price and it not being what we thought it would be, again, what is betraying the price and what is betraying the rhetoric is the huge accumulation from the top on down and the difficulty getting product, and I don't see it getting any better. I really don't.
And just to be clear, so when you're talking about this top-down acquisition of the precious metals by big buyers, you're referring to gold as well as silver. And the reason I ask is, I think it's no secret at this point, one of the big topics has been central banks buying up so much gold, but you're talking about things that go beyond that.
Well, the central banks bought more gold last year than at any time in the last 55 years. So, but it is not just those. And there's what do I call it? It's called the Commitment of Traders. It's a report that's published every week by the COMEX, and it shows the positioning of the largest traders. And it used to only show the positioning of the commercial banks on one end and the hedge funds called the speculators on the other. Specs and the commercials. And then in 2020, out of nowhere, a third group of reportables appeared on this report. Out of nowhere. I've been reading it for years, and there was only these two, and it's called the others. And the others are believed to be sovereign wealth funds and family offices, the most well-funded, well-informed private money on the planet. And they have been systemically and systematically draining all of the exchanges. And from the top on down, that's what I mean. When you're taking possession and deliveries off of COMEX, you have to be very well funded and very sophisticated. So these are not mom and pop traders. And I don't know that these are central banks either, but they are very wealthy private investors that understand what's coming.
Yeah, and I think, people come to events like this and they want to get information on big themes and what's going on in the markets. They also want to know, what can I do about this, right? So from your perspective, these are major events that are unfolding. How do people get ready?
Do what the biggest money in the world is doing. De-dollarize, mitigate your exposure to the dollar, get out of debt, and own precious metals as wealth. To whatever capacity you can. You don't need to take possession of COMEX contracts. You don't need to spend millions of dollars to prepare. You do it however you can, whenever you can. When I started in this industry, I was 20 years old, barely. And my father and I started the company with one rule, he told me. One rule that stuck with me to this day. I own the company. I've owned it, for a long time. He's not going to fire me any longer. But the promise was, I have to buy something every 2 weeks or he'll fire me. Well, when I was 20 years old, I could deal with that. I'm 52, so 30, however many years later, 33 years later. I've never missed a 2-week period ever. And I own and purchase every 2 weeks. I buy gold and silver. And some weeks it's a lot more than others. And some weeks it's a couple of silver coins. Whatever it is, I've honored my promise. But to me, it's the greatest gift he's ever given me. The understanding of paying myself first, of saving, and putting away what I consider to be wealth. And so you don't have to make massive purchases. You just need to pay yourself first and look at it as wealth. And it's a good way to do it on a systematic basis, bi-weekly, weekly, monthly, whatever it is. Pay yourself first, put it away, and hope you never need to use it. If you do, you're darn glad you have it. If not, it goes to your kids and your grandkids.
So this is something that people can do to be prepared, get ready for events that could come to pass in the future. I know that this is difficult to answer, but questions, when we start talking about topics like this, everybody wants to know, okay, well, when should I expect something to happen? When do I need to be ready by? Is there anything you can tell us there?
I'm the little boy who cried wolf, 100%. But at the end of the story, the wolf comes. and the wolf is coming. I don't know when it will happen. I think we've been living on borrowed time for quite some time. I look at these prices as a subsidy, as a gift. When I look back at the 33 years that I've been doing this, the projections that we've made as a company, almost all of them have come true, literally, because they're based upon mathematics and economics with a sprinkling of old school logic. We're never within a grenade shot of when we think it will happen. We're always early. But as I was talking with Lynette Zhang this morning downstairs, and she said something that I said, gosh, I've used that a lot. I've used that a lot, and it's so true. And it's, I'd rather be 60 days or 6 months or 6 years early than 60 seconds late. And so I don't know when, but I think mathematically, economically, we're living on borrowed time. I always throw out this number, and when people hear it, I think they have to pause. You know, we have a $33 trillion or $31.5 trillion debt and 130 trillion in unfunded liabilities: Medicare, Medicaid, Social Security, government, military pensions, and a trillion seconds ago was 31,688 years ago. The numbers have gotten so big, it's almost unpayable. So when will it happen? I don't know, but I think we're inching closer. And this is the whole thesis of what you and I talked about in Boca, about the de-dollarization, the governments of the world moving away from the dollar because of the mismanagement of the world reserve currency. These things are inevitable, mathematically, logically, economically. So rather than try to pinpoint when it happens, just understand the inevitability of it and do the best you can, however you can, to whatever means you have at your disposal, and start to do what the sophisticated money is doing. And not only are they acquiring it, but they're removing counterparty risk and they're taking possession. Pulling it off of the exchanges is really the difference in all of this. It tells me that they're concerned about what's coming to the point where they want to remove any and all counterparty risk. And that's one of the beautiful things about gold and silver, Charlotte, is that they are one of the only assets in the world that are not simultaneously someone else's liability. And Doug Casey made that statement famous, and I think no truer words could be said about them. And there's something to be said for that in a world of diminished privacy and, where having something that no one knows about that's off the grid that you can pass on to your children, there's something special about that. And not only that, it's immediately liquid wherever you go, whether you're here in Vancouver, whether you're on the Bahnhofstrasse in Switzerland, you're in the bush in Africa. You show someone a piece of gold and silver, they know what it is, they know what it's worth. Even if your languages don't jibe, it's universal. And that's kind of why I call it wealth and look at it that way and know that in the end I'm in the right place.
All right, I think those are some great thoughts for everybody to follow, and we will link to that interview from Florida in the description, because that really lays out your whole thesis on the Great Reset, and I think people would benefit from seeing that as well. But we can wrap it up here for now, unless you had any thoughts on your mind that you want people to know about.
No, I think, look, I'll say this, the last thing that kind of blew me away and kind of the state of affairs of where we are with the dollar. Right before I left, I saw Janet Yellen, the Treasury Secretary, say that we need to go to great lengths to raise the debt ceiling, right? To keep the debt-laden government going. And the extraordinary measures that she went to was borrowing money, if you want to call it that, from three groups. The Postal Service Retirement Fund, the Disabled Veterans Retirement Fund, and the Civil Servants Retirement Fund. So she, in essence, stole from retiring post people, from civil servants, and from disabled veterans. And this was to keep the government running. And the craziest thing about that was the very next story on Yahoo Finance was US votes to give the Ukraine another $50 billion. So on one hand, we're funding a war across the globe that could lead to World War III. On the other hand, we're stealing money from retirement accounts because we're broke and insolvent and can't even fortify our own borders. The US and the US dollar is, I believe, ultimately in trouble. And the people steering the ship are greatly increasing the speed at which these things happen. To your question prior, when does it happen? I don't know, but the decisions that are being made on our behalf are accelerating. So I think you're late in the game if you haven't acquired precious metals, and I think it's important to do that. And whether it be through Miles Franklin or any other company, I think it's really important to look at gold and silver in a different light. It needs to be part of your portfolio. You have to start to mitigate your exposure to a currency that I think globally is beginning to lose confidence or have a lot of confidence lost within it. So that's really my 2 cents. I'm optimistic for the future, but I'm also very cautiously optimistic for what it's going to be in the near term and how we get to that point. And I think precious metals are a good bridge to where we are now and where we'll ultimately be.
Okay, well, we'll leave everybody with that thought as we're wrapping up. Thank you so much for coming on to talk about what's going on. Great to hear from you. Of course, and once again, I'm Charlotte McLeod with the Investing News Network, and this is Andy Schectman with Miles Franklin.